The Dutch National Bank, who I've talked a lot about, and the revaluation accountant, he recently said this has been a political decision. If there is a financial crisis, the gold price will skyrocket, and official gold reserves can be used to underpin a new gold standard, according to the Dutch National Bank. Well, you got the heads of central bank, one guy saying that it allows you to start over with a new gold standard, and another guy saying that it allows us to protect ourselves against the grid going down, in essence, and everything is digital. I mean, what more does a guy need to hear? And then when you see the central banks buying it at a level the world has never seen, and you see the exchanges all in unison suffer the same issue the day that the market goes down, it's like, are these tests? Are these warnings? Are these crumbs? I don't know. You tell me. This is where I try and take all of these things and put them together.
Central bank demand for gold has surged in the past 5 years, swallowing nearly 1 in every 10 ounces produced by the mining sector on official data, and perhaps twice that size on the gold industry's best purchase estimates, including unreported allocations. That total equates to almost 60% of the massive private investment demand seen since the summer of 2019, and it matches net consumer demand for jewelry and technology use over the period. Considering the current trends, renowned financial analyst Andy Schectman states gold's resilience despite the volatility seen in Bitcoin and broader market downturns. He notes that central banks are buying gold at record levels since 2020. He highlights the Dutch National Bank's view that gold could support a new gold standard during a crisis. According to the latest data from the World Gold Council, in the second quarter of 2024, total global gold demand increased by 4% year-on-year to 1,258 tons, marking the highest quarterly level ever recorded. Total demand was underpinned by a healthy level of OTC transactions, with a significant year-on-year increase of 53% to 329 tons. Andy cites Adam Glapinski, head of the Polish Central Bank, who in 2021 emphasized gold's importance for financial security. Glapinski noted that Poland expanded its gold reserves to protect against extreme scenarios where electronic assets might fail, highlighting gold's enduring value. Reflecting on the ongoing situation, Andy predicts a tough year ahead, with mints running out of inventory by late fall as usual. He believes heightened volatility, leading to events like the BRICS summit, and the election will make it one of the hardest years ever for mints to meet demand. For decades, the United States Mint did not obtain, nor even request, any documentation confirming the origins of the gold they sourced from suppliers and refiners, all while promoting their most popular coins as minted from 100% newly mined American gold, according to a recent report from the U.S. Treasury's Investigatory and Auditing Office. Now we present the clips of Andy Schectman's insights from his recent interview. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
I wonder why people even question how gold's strength it's been so resilient, and Bitcoin corrected and the market sold off, yet gold's been so resilient. And I guess my point, Dunnigan, would be, how many more times do you need to hear this before it sinks in? Again, another record being made. First 6 months of the year of 2024 represent the most gold central banks of the world have ever purchased, ever. And it only superseded last year's first 6 months. And you, at the top of the list, you have Turkey and India, of course, China. And it reminded me of something that, and I went and I dug this up because a couple years ago, Adam Glapinski, who still is the head of the Polish Central Bank, said something very interesting. In my mind, he tipped his hand, because in 2021, he said, and I'm going to read this to you, he says, he was trying to explain why they were expanding the country's gold reserves by 100 tons. And when he announced the plan to expand it, he said the following. He said, our gold reserves are a matter of financial security and stability. Gold will retain its value even when someone cuts off the power to the global financial system, destroying traditional assets based on electronic accounting records. Of course, we do not assume that this will happen, but the saying goes, forewarned is always insured, and the central bank is required to be prepared for even the most unfavorable circumstances. That is why we see a special place for gold in our foreign exchange management process. And here again, they're buying truckloads. Here again, you got the central banks buying more gold than at any time ever. But this has been something that I've been saying to you since 2020 now, over and over and over and over again. And it goes back to what you and I were talking about before we turned on the camera about the little man rule and how the big guy's always ahead of the curve. Well, there is no bigger guy than the central banks, not only in wealth, but in understanding and in foresight and in the playbook. I think it's very illuminating. And then, of course, you have the Dutch National Bank, who I've talked a lot about, and the revaluation accountant. He recently said this has been a political decision. If there is a financial crisis, the gold price will skyrocket, and official gold reserves can be used to underpin a new gold standard, according to the Dutch National Bank. Little crumbs that are laid at our feet. Well, you got the heads of central bank, one guy saying that it allows you to start over with a new gold standard, and another guy saying that it allows us to protect ourselves against the grid going down, in essence, and everything is digital. I mean, what more does a guy need to hear? And then when you see the central banks buying it at a level the world has never seen, and you see the exchanges all in unison suffer the same issue the day that the market goes down, it's like, are these tests? Are these warnings? Are these crumbs? I don't know. You tell me. This is where I try and take all of these things and put them together. Almost every year I can remember when you get north of Halloween, the mints start to run out of their current year issue, and they're like, we'll pick back up next year. Well, you throw that into the BRICS meeting in the election. In fact, we'll remember I said this. I would bet there is a high probability, and that assumes that there's nothing earth-shattering that happens between now and then, but who knows, that it will be the hardest year ever, with more and more people understanding what's going on as greater volatility leads up to these big events. With the mints running out of their products typically anyway at that point of the year, and they don't start making new stuff till the following.
While reflecting on the FDIC's report of $600 billion in unrealized banking losses, Andy Schectman critiques the Federal Reserve's oversight of banks like Silicon Valley Bank. He expresses concern that proposed rate cuts could exacerbate financial instability. Concurrently, Schectman notes a rare Forbes article that positively frames gold, advocating for a gold-based monetary system and gold-backed bonds. The head of commodity strategy at Saxo Bank says, "We maintain a positive view on gold as a diversifier hedge against turmoil elsewhere. If the Federal Reserve begins cutting rates, potentially as early as next month, interest rate-sensitive investors may return to gold via ETFs." Despite declining confidence in the dollar, Andy Schectman points out that central banks are buying gold at record levels. He notes that influential figures like Judy Shelton and countries like India are exploring gold-backed financial instruments as a response. Let's get back to the interview.
When you talk about Silicon Valley Bank, the FDIC reported $600 billion in unrealized losses in the whole banking system, and the Fed always claims to be looking at all of the data, and they're supposed to be the key supervisors of the banking system. They would have had Silicon Valley's books. They would have had it all, and they didn't. And they jack up rates, and the whole system collapses. And here again, after you see one day drop, you have Jeremy Siegel, trotted out almost in tears, begging for a 150-point basis rate cut. Here again, to go, not only would that be the worst thing to do, because it would only exacerbate the unwinding of the carry trade, because it's if the yen goes higher, or the interest rate goes higher, or the interest rate received from U.S. Treasuries goes lower, well, the yen carry trade unwinds further. And I mean, they're not thinking this out, but here again, giving in to austerity, giving in to lowering rates in a weak dollar, and those aren't good things. And it's what they have always chosen, and this is what Trump wants to do too, and which kind of bothers me. He's advocating for a weaker dollar and for lower interest rates, and Vance is talking about, well, maybe the dollar shouldn't be the world reserve currency. Where did we hear that before? Oh yeah, knucklehead Jared Bernstein. So I don't know that anyone's going to be able to pull us out of this, but what I do think is that we are destined for much higher inflation as a result of a lower dollar, a lower interest rates. But what does that do to the debt? Who wants to buy our debt? And maybe this is why you see Judy Shelton come up and say, yeah, well, that's why you should issue 30-year treasuries in gold, which leads me to one last thing before I let you go. And that is a report. I don't know how many times when I see a report about gold in the Western media, it's always really bad. It's always, they frame it in a very bad way. Even if it's a bullish topic, they will frame it in a bad light, right? And they won't speak to it in a flattering way. And they'll say, yeah, but Yeah, but. So let me see if I can find this here real quick. So the title of the article in Forbes magazine is, "It's hard to believe, but the world is beginning to lurch toward a gold-based monetary system." This is one of the first really positive, gold-positive articles I've read in a Western article ever. It's a very short one, so I'll read it real quick. So the author says, it's hard to believe, but we're lurching towards a gold-based monetary system. This despite the fact that the historical gold standard is held in almost universal contempt by economists and financial officials. Contrary to numerous myths based on ignorance, the system worked. The U.S. was on a gold-based system for 180 years until the early 1970s. We never had inflation when the dollar's value was tied to the yellow metal, and the U.S. experienced the greatest long-term economic growth in human history. The signs of change are here. One is that the central banks in recent years have been purchasing gold at record levels. Buyers include China, India, and Russia, and a number of other nations, such as Poland, Adam Lipinski. These countries are reacting to growing doubts about the long-term value of the dollar, which in turn is a symptom of the perceived decline of the United States. And I want you to think of Judy Shelton right here, who would be, I think, the head of the Federal Reserve if Trump wins. She's a gold bug. She advocates for the gold standard and issuing 30-year treasuries backed or redeemable in gold. It says, India last year began experimenting with gold-based government bonds. Monetary expert Nathan Lewis, who co-authored our book, Inflation, What It Is, Why It Is Bad, and How to Fix It, observes, these would probably be very popular with investors worldwide. From the start of the floating currency era in 1971 to the present, a gold bond paying 4% would have outperformed every stock and bond market worldwide. Zimbabwe, which must hold the record for hyperinflation, recently announced the launch of a new fixed currency in gold. Deep skepticism is warranted that this government has the discipline to make such an arrangement work, but the move is a sign of things to come. So I don't know that I've ever heard an article that framed gold quite this way in a Western publication. But in essence, what they're advocating here for is a gold standard, gold bonds, and tying a system to a tether that installs confidence in a country and in a financial system that's lost confidence.
Given the current trends in gold demand, including the record purchases by central banks and the exploration of gold-backed financial instruments, gold will likely play a crucial role in financial security. How do you think the surge in central bank gold purchases will influence economic stability shortly? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.